the right investor for your company is a process. It doesn't happen in a day, and it takes interviewing several types of investors, and in those groups, several investors. I think the most important thing is to focus on the investor's expectations and motivation. Why is he or she investing in your company? What is their overall business goals? For example, the business goals of an angel investor might be very different than the business goals of a VC. An angel investor that might make a single investment is very different than a VC that makes multiple investments, and there are certain dependencies between these investments, specifically as they drive the final ROI of the VC. So you have to consider that. You have to understand that you're bringing in an external set of expectations and an external business model on top of your existing business model, and ask, is it in line with where I want to take my company, my product, and my team, or not? The second point is value added. Okay? Many investors will come in and claim that they have value added, and in many cases that is true. They will refer to introductions that they can make, either to existing companies in their portfolio, or to some of your potential clients, or to key figures in a particular industry that they can help you get into. Some investors come in with previous experience about a product or a similar company that they've run in the past, and they claim that they can come in and help you. While all of this might be very true, and the input from the investors is very, very important, you have to draw the line between the three different roles that you hope your investors will serve. Number one are advisors, those who help you drive your business forward and give you advice. Number two is investors, those who provide capital for your idea to move forward in different terms and in different ways. And number three are board members. The board member's role is to advise and consent, to ask if the actions of the company are beneficial for all shareholders, not just for this class of shareholders or that class of shareholders, but in order to maximize the overall return of shareholders. I think value added and expectations are the most important things that you have to look for when you are interviewing investors, or when you have investors that you are trying to seek. The right combination of value added and expectations will really reduce the friction in the company over the few years that you're hoping to take the company, and specifically will be key when the company is trending through this area of non-profitability until it hits success.